So we're here today for a second, you're on for the second podcast actually.
Second
one.
Yeah.
So today we have Athena Constantinou, who co-owns Sherwood Mortgage Group, which is a large mortgage firm here in Toronto. You're also a best-selling author of Mortgage Don'ts.
Yeah.
I think it's on Amazon, you can get it, right?
Yes.
You're also a mom, full-time mom.
Yes.
I feel like I do nothing now, to be honest.
No.
I feel like I accomplish nothing and I do nothing.
I feel like I want to quit all of that too someday, so don't worry about it.
And then obviously you have myself and Steve here, like usual.
Welcome. I know Antony gave you a little introduction. I don't know if you want to add to that at all. Maybe you can describe or say 3 things of why you love the Property Boys.
Well, I love the Property Boys. Okay, perfect. I love the Property Boys because of 1, Steve. 1A, like 1A and 1B, Antony. 2, your team, because you guys are super duper organized and you're fantastic to work with.
Aside from telling you when to come in person.
Yeah. And 3, your clients, because they're fantastic to work with. You guys do a great job with your clients. It's a pleasure to work with you guys. In terms of Sherwood, no, you nailed it. We're Toronto-based. We are almost across the country right now. Big team, we can service.
Oh yeah, I forgot. You guys do almost $1 billion in volume, right?
We do over $1 billion.
Over $1 billion now, right?
Yeah, over $1 billion in volume. We've got a fantastic team. So it doesn't matter where your clients are, we can service them. It doesn't matter what language they speak, we can service them. So I'm only as good as my team.
A big chunk of it's, I think I read online, is alternative lending as well, right?
A good chunk of it is alternative lending. Yeah, so we can access every bank, we can access every, private lender, commercial lending. It's full service.
So I just wanted to touch on that a little bit. So anybody looking for a pre-approval or looking for a mortgage, they can obviously go down the street to their local branch.
Yeah.
Just quickly, tell us why you think it's advantageous to perhaps, go to a mortgage broker versus
a bank. So your banks are great. We don't hate any of the banks. We're friends with them all. Your local bank is going to give you what they offer. So they have their niche product, they have their niche clients. Sometimes you just don't fit. So rather than lose the opportunity and not be able to get that property, the investment property, your first home, a place for your kid to go to university in, you go to a mortgage broker and we shop. So you guys see the big 5 banks on the street.
Yep.
But you don't see, for instance, ICICI. You don't see HSBC as common. You don't see some of our monolines, right? CMLS. These are all A lenders that have spectacular rates, but they're only accessible through a mortgage broker. So why lose on that possibility?
Yeah. So it's not always about rates, right? Like
No.
I mean, there's a lot of things in the fine print that are important that people just overlook, and this is why when you have a breadth of product, you can sort of strategically pinpoint these differences. So
someone that's like an what do you call it? An A applicant or a top. Would they go to one of those other A lenders, or would their best bet be with the bank?
No, you can always go to one of those A lenders because they all have different promos. They all have different rate promos.
So it's actually not. So it could be advantageous to know. Okay.
Yeah. They have different specials. Sometimes most banks are pushing a 5-year. Sometimes they'll have a 2-year fix. Sometimes they'll have a different way that they calculate the variable and the interest rate on it. Sometimes it's a prepayment option. Some of the banks will have 10%, whereas some of these monolines do 20.
Right.
And if you're coming into some money, an inheritance, a bonus, or something, you want that ability to prepay. This is the fine print.
And this usually comes up after the fact that I didn't know. I didn't know it was only that.
You got it.
So
You got it. Some of the lenders offer line of credits, so you're putting the 20% down. But as you build your equity, you may want to tap into that equity again. So why go through a refinance when you can just build in that line of credit ahead of time, one stop, right? You buy the house, we stick one of those products on, and it builds over time, right? So we get to know the client. It's not a transaction; it's a relationship.
Right. Is it true that I've always heard that when you dig into the fine print of, I guess, like a B lender or even some of these other A lenders, it's more expensive with fees with a broker versus the bank?
Not necessarily. No, the alternate lending is more expensive, but imagine it like car insurance. The more accidents you get into, the higher your insurance goes. Right? We all have cars. We all have insurance. You're paying different because you're in a different neighborhood. I'm paying different because I have a different color car. So it's risk-based. The higher the risk, the higher you're going to pay. So usually when you go A, the box is much smaller to fit in. We got to have income confirmation. We got to have down payment. You got to have good credit.
Right.
So the box is this big. You don't fit that box. The options are, hey, sorry, we can't help you. Well, now we can help you. We can open up the box. But by opening up this box, it's additional risk.
It's additional, but
additional risk,
so
right?
You got to charge. I mean, there's an additional charge.
They're charging for that, but you're not losing the opportunity, right? So are you going to pay maybe 1% more than the banks? Possibly. You're going to pay possibly a lender fee. Yeah.
Right.
Do you have 12 properties and you just don't fit anymore and you need a private mortgage and it's going to be interest only, but if there's an opportunity to renovate it, flip it, and make that money and then some, you take that, right? You pay a little bit up front, but you know you're going to make it up on the back end.
Right.
It's just getting to know the customer and offering the right solution.
And I just want to add one more thing about mortgage, or even if you're working with the big banks,
Yeah.
you would have a better relationship with these people than even for me going to my personal bank. I mean, how many times do I talk to these people?
Well, yeah, and for instance, we're on pilot programs. Like I'd mentioned HSBC, we're one of the brokerages that are on these pilot programs. So when they open up to the broker community, because we're big enough and we commit certain volumes, they will give us access to all their new products coming in. Somebody might be too intimidated to walk into an HSBC branch and say, hi, I want a mortgage, right? We're one of, I don't know, we're top 5 maybe for Scotiabank. So they give us preferred pricing that we can then pass on to the customers. Other times you have a branch relationship, and yes, sometimes a branch might say, hey, you know what, you're a really good customer, let's give you a fantastic rate.
Right.
But if you don't shop it around, it might be a great rate, there might be something better. It doesn't hurt, it doesn't cost anything to call us and say, my bank gave me this. Is there anything else better out there? We're more than happy to let you know.
For the simple reason too, you would have better questions than we would, right? So this is why I think it's vital to me to really look at a mortgage broker versus tunnel vision into one branch or whatever.
And it's not costing you anything to talk to us.
Right.
It's not costing a thing. Send an email, send a text. Hey, Athena, you know what? I was thinking of doing this. My mortgage is up for renewal, whatever the situation is. Can you give me 10 minutes? Just help me understand what I should look for. And we're more than happy, even if we don't get the deal, just to say, hey, look, Mr. or Ms. Client, this is what we would recommend. Go back to your bank and suggest ABC. So it's that relationship piece.
Right,
So next time they do think, they need something, they'll come back to us and say, no, now what do you guys think? And maybe there's an opportunity later on.
Because you guys are so relationship based, did you see any kind of issues now with a lot of the online, like the mortgage approvals that are happening online, rate hubs, like that kind of stuff? Has that affected you guys?
No, because those are very specific. They're algorithm based and they're very specific to what we call vanilla deals. You got to fit that small box, right?
Right.
The mortgage broker is required when you need service, when you need advice, when you're coming to me saying, like the gentleman this morning who called and said, hey, I'm a Canadian citizen, but I live in Windsor and I work in Detroit, and I don't file taxes in Canada. So now you see, as you unpack it, it gets a little more complicated. These online portals don't help.
I almost look like those online portals similar to, get instant access to what your property's worth.
Right.
Yeah, exactly.
It's very
It's
limited.
very surface.
That's it.
Correct.
Right.
And, some will fit in there.
Right.
Some properties will fit in there.
Mm-hmm.
Not all of them will. Same thing with these portals, and they're fantastic. It'll give a gauge to a customer until then afterwards you start asking certain questions, or until they go to the bank and say, but the bank pre-approved me on these portals,
Right.
and now they decline me afterwards. And it's like, well, yeah, you forgot to mention that you declared bankruptcy a couple of years ago. And, that's a no-no with this bank, right?
Right.
So a conversation's always good.
So tell us, what's happening with rates? Is this going to stop?
Any more hikes?
I'm not sure. I would personally say, yeah, there's one for sure, maybe.
It's coming another.
I think there's another one coming.
6th,
Yeah, I think there might be another
Any
one
predictions
coming.
with that? I know you don't like doing that. Nobody, listen, we're not going to hold
Yeah,
you
you're
to
not
it.
gonna
We're not
hold
going to
me?
rewind and.
I say, look, Athena said.
Yeah.
Athena said, so government listened to her. You know what? So when I started this business 25 years ago, prime was in the 7s and 8s.
Right, so there you go.
And and I got my mortgage a few years later, and I had like 6 and change, and I had variable once upon a time ago. And I mean, I still have
your house
variable.
costs $500,000 or $400,000.
My house cost me like $240,000 back then. It was a while ago. They're going to throw out words like inflation. They're going to throw out words like affordability. They're going to throw out words like we've got to curb spending, and all these economists and all these fancy, people with the big brains on how these rates get calculated. I think, do they need to curb spending a bit? Yes. Are these high rates? No. I think
not historically.
No. These are normal rates.
Yeah.
Normal. What we had was obscenely low, which was great. Free money. Woohoo. Like, let's go shopping. But it gave, my personal opinion is it gave a little bit of a false sense of security.
Yeah.
right?
100%.
Yeah.
So we're not double digits. Those are high. 8, okay, maybe high. 7, maybe a little.
5, 4,
5,
6.
4, 6 is great. I mean, when you're coming from 1 point nothing, 5 hurts. 5 hurts when you're coming up for renewal.
Yeah.
When you're coming up from 2 point nothing, 3 point nothing, and you're again 5, 8, 9, it's gonna pinch, right?
So in 2022, how many rate hikes have we had?
I lost
I
track.
think it was
6 already?
7 maybe? 6,
But
7,
that's
I
just
don't
prime, you guys. You know, the fixed rates
Yeah,
have
true.
also gone up,
Yes,
right?
Yeah.
yeah.
So
So just talking about, have we really seen the impact of the variable rates in terms of qualifying? I totally get that, but people already existing or already have a variable rate
Yeah.
mortgage, for instance. This was kind of news to me because I never had it, but they have a static payment per month.
some of them do, not all of them.
Not all of them. Would you
Not
say,
all of them.
what percentage would you say is a fixed kind of payment?
So some of the bigger banks, I'm not going to name the banks, but some of the bigger banks have a static payment, and it's fantastic on a decreasing market.
Right.
Mm-hmm.
So
You
I
pay more
said-
principal after, right?
As the rates drop, you're paying more principal. You're like, great, I'm used to this payment, fantastic, and a knockoff mortgage. When they sell it to you as, hey, you don't have to worry about it because as rates go up, your payment's going to stay the same, start to worry because more of that's going to start going to interest. And then there's that magic word called trigger rate.
Yeah.
Right.
Until that hits.
When you hit that, you're now paying all interest.
50% of mortgage holders now
Are
hit
there.
the trigger rate.
Yeah. And so these mortgages are either going to get adjusted midterm, and the bank's going to say, hi, client, fork over, a few $100s more so that we can start nailing down principal. Or what I've seen is on renewal as they come up, now you've extended your amortization because you haven't paid off
Right.
any principal to like 47 years and you started at 30. And the bank goes, well, 30 minus 5 is 25 years, which is what you should be at. 47 to 25, they need to squeeze that mortgage owing now, and your payment shoots through the roof. The other lenders, as they adjust, as prime moves, they adjust the payment. It hurts incrementally less. It still hurts.
Less of a shock, though. Less of a shock.
Right, because you get that letter. Every time rates go up, you're like,
Yeah.
hi, your
This
new
is-
payment is.
This takes away of being in la la land because I don't know if my payment wasn't affected. It is in the scenes behind.
Right.
It'll always
behind
be
the scenes.
affected.
Like my interest rates is going out. I'm not paying
Yeah.
next to any principal, but my life hasn't changed.
Correct.
So going to your point, Anthony, when you said 50%
Or hitting trigger rates.
are hitting trigger rate, is that 50% of those with static payments or those with variable rates?
Those with the
Well, those
static
that have- I
payments.
think they're
With the
static.
static,
Those
okay.
are
Yeah.
the only ones that would actually be
That have the
affected by the
No,
trigger
I
rate.
understand, but I just thought that, yeah, it's
So,
true. So is there a stat, like what percentage roughly is it?
No,
with this?
no, because like I said, out of the big 5, I can think off the top of my head, 3 that are static. They're static payments.
Okay.
The other 2 will move. My own is with one of the other ones, and it moves. Every time I see a mail from this bank,
You know what's coming.
I know when I open it, it's going to hurt.
So what do you
Now-
see? Like, what are you hearing from people? Are people really getting affected?
Most people, so if they're first-time buyers and I'm talking to you, and I see that, you just don't have the room. So when we qualify a mortgage, I don't ask you about daycare costs.
Right.
I don't ask you how many times you go to a restaurant or how many
Right.
times you travel during the year. I just find out what your shelter costs are, some heat, some taxes. But you have life in addition to this.
Right.
Right?
And now inflation on top of that.
Now inflation on top of that. So if I see a young family, I'm not putting you in a variable. Unless I see that your qualifying ratios are really low and you've got a good amount of room to qualify where an influx isn't going to impact your day-to-day. If I see, though, that you maxed out on your house because it was a great opportunity and you're like up to, I don't know, here in terms of like qualifying right to the end, I'm going to try and convince you to stay fixed. Get your feet wet, get in there, manage your house, manage your bills, manage that leaky basement if it hits or the leaky faucet should it happen. Because it's a house, it happens. It happens to everything, right? After the 5 years, if you want to venture into a variable, fantastic. But you've got a little bit of a history and a track cycle of, how you've made your payments.
Right.
So for the most part, we avoid the first-time buyers. The second-time, third-time investors, they're cool. They can do whatever they want. They can manage this, and the investors most of the time have their spreadsheets, which will tell them, once variable hits 7 or 8%, I'm out. I got to lock it up because now my cash flow is going to be impacted.
They've done the
spreadsheets,
math.
They
did the math.
It's
There were a
down
lot
to a
of first-time
penny.
buyers, like in the a year and a bit ago, that went variable because the rates were so
Right.
right. There was
Yeah.
a lot, like my
Yeah.
sister included, actually.
They're calling
Same,
now.
yeah.
They're calling and they want to lock in. But that's dangerous too because what's happening now is both rates have gone up. If you jump ship into this, you start a brand new 5-year fixed today.
Yeah.
And if you're 2 years in right? You could go, 3, 4, 5 years, but you lock into a 5. And now let's say rates drop 3 years from now. If you're at 5.89, you're going to get hit with a higher penalty now because they're going to take your penalty versus the going rate. So you're screwed again, right?
Is your advice, is this about a little bit about hindsight 2020? Meaning
always.
Okay, yes, always.
Always.
Because historically, we know that you were a winner with variable mortgages, right?
Correct.
So
you still could be. You won't know though until you go forward
you wait it out.
and look back, right? Because you don't know, we're doing this right now, but you don't know when this is going to happen. And if the fixed rates, if you caught it there and variable comes down, you're still winning.
I would argue that we're in a. Okay, just hear me out for a second. I'm almost thinking that
he keeps trying to convince you.
No. I think we're in a better position almost today in purchasing because house prices went down.
Yeah.
Okay, rents have gone up, especially when we're talking investment. I'd rather be at higher rates, buying at lower prices than
because the
lower
rates
at higher
can
prices
change too, right? Because the rates will change. Hopefully.
Okay, because we know with the lower rates, you would think it's going to go up.
But you can manage it. It's the lower rates, are going to go up. But you can also, with those lower rates, if you really wanted to think ahead, make your payment at a higher rate. Mm-hmm. So if you have a 2-point-nothing, pretend that it's 5 and make that payment and have that sticker shock built in there if you wanted to think ahead.
Yeah, so going back to it, somebody always said, what do you think you should do?
Right.
And I'm not a mortgage broker, but I just obviously talk to your mortgage broker, but this is what I would do.
Yeah.
I would get the variable rate mortgage because historically you're a winner there, but pay like you're paying like a fixed rate.
Correct.
And this way you're mitigating any kind of risk.
Right, but nobody does that because you got an extra couple $100 in your pocket.
Just set. I just set mine's fixed actually, and I didn't go higher.
Yeah.
And you just set it and you just forget it.
You just forget it, right?
Hopefully.
So talking about people now, like what you're saying is people in a variable right now, if you can ride it, keep riding it almost.
I would.
I would agree because, the outlook is this is what I heard. I don't know what you're thinking. The talk is right now, maybe another bump, a little bit of bump, hopefully just a little bit in December 6th.
Yeah.
And then we're looking at 2023 the same.
Easy, kind of coasting.
And then after that should be maybe lower. We're looking to something lower.
We're hoping.
Yeah, we're hoping. To ride it out, we're looking at just about a year.
A year.
Yeah, like I said, my own mortgage is a variable, and it stings when you look and see what you were paying versus what now. It's kind of you're like, oh man, what's going on? But
you were looking when you were paying nothing, and it was better for you in the.
I had my payments cranked up, so I was taking advantage of that principal repayment. Going, these are so low. Let me start knocking off principal. So if rates go up, it'll start eating away at that principal portion, not deteriorating my initial payment. Right.
This is why I always have a caveat. Please talk to your mortgage broker because right now people even a few months ago, should I lock into a fix?
Yeah.
Well, I would do variable, and now they're
talking
to say, well, why'd you say variable? I said it, but I said talk to your mortgage broker too.
Yeah.
Right?
Well, even some of the B rates. So imagine last year, people were getting, really, really low fixed rates on the A banks. The B guys, the alternate lenders were giving out, let's say 3.29. And everyone was screaming, why do I need to pay 3? It starts with a 3. Oh my goodness, like the worst thing in the world. And all these people, because those are short terms, they're 1-year terms, they're all coming for renewal now. And they're all coming for renewal in the 6.99, 6.79, 7.29. And they're screaming, saying, why didn't you tell me to lock in? I'm like, but I barely got you this one and you were screaming for a year.
Right.
With the intention to try and move you back to a bank. But even the bank rates today, let's assume they graduate from B to A, they're still sitting at, mid to high 5s on a fixed term, right? You can't tell. It's all hindsight.
So with the rates going up, and there's a reason why I'm asking that. With the rates going up, are you finding that the private lending is actually becoming more available? And the reason why I'm saying this is because I've had people say, listen, I'm thinking of selling my place and actually lending money.
Mm-hmm. Yep.
And I'm just, what are you seeing? Are you seeing an opportunity? Like the banks have their thing, and now there's a lot of people maybe wanting to come into the game and being a little more creative.
Yes and no. So everybody's getting demoted in terms of what they can qualify for. So the A guys, not all of them are, A clients who they should have been. They're falling into B world. Some of the B guys are now falling into private world. The private lenders are running out of money, yeah, and they're actually being very picky, funny enough. So you're sending in a deal like, yeah, no, maybe I don't want this one, or yeah, maybe I'll do this at like some crazy rates, and you're thinking, hold on, it's a first mortgage. Why are you charging double digits? Because the demand is there. Right? So, and the supply is deteriorating. Now, for somebody to say, I'd like to come in and start lending money, that's a totally different conversation with totally different risks. They can't just say, oh, I'm going to go in there, Wild West and charge 15% and get some fees, and I'm going to become rich off of doing this. It's a completely different conversation. There's different mechanisms that they can invest this money, from lower risk to higher risk. Are some people doing it? Yes. Are some people holding on and waiting for the market to drop possibly a little bit more? Yes. But is there a right answer? No, not yet. I haven't seen many come back. I've seen people offload extra properties. So if they've got 2 or 3 rentals, right, they'll get rid of one and keep some cash aside. Maybe to pay down one of the other ones, or maybe to lend out. But to lend out, just be careful. Be careful.
Yeah, nothing is easy, right?
No.
It's just, and it's hard to give advice, really. You're there to listen and just try to give us, your knowledge and open up the options. That's all.
Correct.
Correct. So I was just looking here. So obviously the rates have impacted prices. They've impacted affordability.
Yes.
Maybe you can touch on those. Well, prices,
that's your realm.
That's our realm. Well, prices year over year, we basically took away all the gains that we've had, over the course of the year.
Yeah, I think we're about 6% now.
6% down on average. So it's not terrible, but like I said, it was going nuts. Peak was February. Essentially, through these rates, that's been all washed away. Affordability, maybe you could touch on that. Loan to value, I was doing. Lending has changed a bit, and your ratios. How are the ratios? Did the ratios change at all? Like your debt ratios?
Qualifying ratios? No, they haven't changed, but you're starting to see some of the alternate lenders coming in now with, we used to have 30 years. Now they're opening up to 35.
Oh, back, eh?
Some of them are opening, not the main A lenders, but some of the alternates. They're starting to offer 40-year amortizations.
Really?
They're starting to offer, like some of the credit unions, for instance, the non-stress test. So I don't have to do rate plus 2 or board rate. So the stress test is board rate, which I want to say is 5.25 maybe right now, if I'm not mistaken, for the 5-year fixed. No, maybe a little bit more. It's got to be more, sorry. Or contract rate plus 2. So if the contract rate, let's say, is 5.89.
So it's like in the 7s now, I guess?
It's 7.89 to qualify you. It's never been rate plus 2. It's always been the 5.25.
5.25, because it was 5.25
or rate plus 2, but it was, you got it. But 5.25 was always the highest, because 2 point nothing plus 2, right? You were great. So now what's happening is people aren't qualifying for their own mortgages that they've got right now. So if I want to switch you over and you owe $200,000 to the bank, and you're like, hey, Athena, take me to TD, and I move you to TD, you won't qualify for that same mortgage most of the time. Because now I've got to stress test you at this higher rate. And it's not that you can't afford it, you've been paying it, no problem. So these renewals that are coming up, people want to take advantage of lower rates, and we're having a tough time qualifying them.
So here's the thing with that. So what are the banks that, like, naturally, when they just hold strong to maybe not giving so much of a discount off the, because they know that they're in a tight spot, that they wouldn't be able to requalify?
Possibly, possibly.
It's not nice to say, but I mean, it's just, well, you're stuck with us kind of thing. And
possibly, I mean, it's not everybody. It's the ones that went in, possibly high ratio, right? Maybe that, barely qualified then. I'm not saying it's everybody that's that, but there are a few, and I had one today. We can't get it moved to a different lender. And it's a much better rate. And it doesn't qualify. It doesn't qualify. And we're like, oh my God, now what? And we've never seen this before in a switch situation, right? In terms of payments, obviously, the higher the rate, the higher the payment. The same house that's now cheaper might cost you, as we talked about during the seminar, might cost you similar or slightly more because the rates are higher depending on the term that you're coming into, right? And loan to values, you've got some of these alternate lenders that were doing, let's say, 80% in certain locations that are now scaling back to 75, right? You've got private lenders now
I can't find necessarily a private lender who's happily going to 80% loan to value. They've scaled it back, right? Because they're trying to build in further price reductions,
Exactly.
right? So if the prices keep dropping, they need a little bit of a buffer should something happen.
How do you see the impact of when these fixed rates start renewing in, let's say, a year or two?
Yep.
Right, when people were at 1.5,
Yep.
we already dealt with the variable.
Yep.
When people were at 1.5, and now let's say by then we're at maybe, God willing, 4.5. How do you see that turning out?
Well, right now, the people who are renewing are calling us to say, no, what am I going to do with these payments? What am I going to do with these payments? And what are your options? You can pay down your mortgage a little bit. A few people are actually contemplating selling.
Right.
So you've got a lot of people saying, I just can't afford these payments anymore, right? I had 2 kids in the meantime, or I lost my job, or I went on mat leave. So they're kind of stuck in a little bit of a jam. Sometimes we can try and refinance and just open up the amortization a bit.
That's one.
But if you're brand new and you started a 30-year amortization and you're only 1 year in,
how much have you done? Right?
Well, that's it.
It's all interest and.
But we've got to remember though. Yes, there is going to be the renewal. There is going to be the higher rates, but they were cushioned through a stress test to a point already.
To 5 1/4.
To 5 1/4. No, I hear you. So, I mean, that in itself should take care of maybe a chunk there.
A lot of it. But we're human beings.
I just wonder
you don't want to spend more than you have to, right?
I just wonder if we're going to see more supply when that happens on the market. People trying to sell, and that might affect.
I would almost think, because there's another point. We do still have a supply problem, so I would almost think that the home types, like these people might change the home type from townhouse, from semi to townhouse.
Maybe.
Or maybe they'll now drive to wherever they can afford, which might be in the 905s again, which is another point where people are starting to come back. We're starting to come back to the city, but
people are starting to come back, and we're actually having clients that are trying to move closer to work. So because of gas prices, because of everything else extra. So I just had a couple who sold down by the lake, and they're looking to go out to Burlington area, which seems so far because from where they are currently, but it's actually closer to work, and it'll save them a commute.
And the traffic. Imagine how. I think what do we hear by 2024? 500,000 more immigrants into Canada, I believe.
Yes.
Right? So GTA, I think let's say it's 250 or 3.
Yeah.
That's going to be a lot of
new
traffic,
bodies.
Right? A lot of new bodies, a lot of traffic, a lot of time that people don't want to spend.
Yeah, well,
traffic.
when you're driving around here, every other street has a lane blocked.
Yeah.
Right? Because there's construction going on. And so whatever traffic you had is now even more exacerbated because of the construction that's going on, right? So as they keep building and fixing infrastructure as well, once you add in all these extra bodies, right, you're only going to have these issues.
Yeah. I wanted to touch on your business a little bit. The transaction-wise, we're down from last year, mind you, was an anomaly in terms of transactions.
Yep.
And I guess the real estate transaction will translate into your business.
Mortgage transactions,
mortgage transactions. So has your business in the same ratio kind of thing as I think it's gone down 20% from a year ago.
I think it was more.
But anyway, are you similarly being affected in terms of volume?
Not as much, because keep in mind we have refinances.
Gotcha.
We have renewals and the switches. We'll have commercial properties. Right. So you guys focus a lot on the residential side of it, but there's also commercial or private sales. My dad is selling off 3 of his properties. I want to buy one of them. So you'll get a private transaction that way, right? So have they dropped? Yeah. So if I look at my team year over year, I mean, we did, I want to say last year we did 1.2 billion funded. We did 1.4 this year, but we grew in bodies.
Oh, okay.
Right. So we have more mortgage agents on our team. It's not the same team. We've grown, right, from let's say 120 to maybe almost 150, right? So is it down a little bit? Yeah. If you look at each older agent's production, it's dropped a little bit.
Right.
So as a business owner, right? So are you looking then to get the same kind of volume? You're just looking to recruit a few more agents? Is that how you're sort of maintaining the sales? Or?
We're actually looking to automate a lot. So we're focusing into technology, where now my agents can be, rather than, every deal that comes in gets all the service, because that chaos that happened last year with everybody screaming multiple offers, and I need a commitment right now, 5 minutes ago, lawyers screaming, realtors kind of like, what's my number at? we're trying to provide a tool now where we can automate a lot of the communication to the customers, and I'm just in the process of building that currently, so that my agents can free up the time to talk to the customers and make sure that they're focusing on every transaction and leaving no room for error, no room for the banks or the branches to come in and swipe that deal from them. So kind of airtight the process part of it so that they can focus on what they do better, which is giving advice. So all the admin stuff, automating from that perspective.
Like, does that include approval? Like that kind of?
Yeah. So we can have a portal for the client. So rather than the clients waiting and saying, oh my God, my broker never called me back for 5 hours, they can actually log in and see real time where their file is at, right?
So the slowdown, but the slowdown period, just like us, it's time to regroup.
It's time to regroup and evolve.
Right.
Right? Because the market's going to look different after all of this. We just got licensed as well in BC. And we've got Quebec coming up. So yeah, we're trying to grow those teams out a little bit. So eventually there will be more bodies as we keep getting licensed further across Canada. But for our current people, we're just trying to get in there and say, hey, work your databases.
Right.
Start,
Just
automate the stuff that you shouldn't be
You
doing
got it.
anyways, and put time in the
got
stuff
it.
that you should be doing.
You got it.
It's kind of like what we try to do.
Well,
all
we're
the time.
both worlds are relationship based, right? We're no good. The admin stuff we can do it, but that doesn't help our customer. It doesn't help
We
them.
also hate doing it.
You can. It's a necessary evil.
Yeah.
Right? It's a necessary evil.
It's not for us, I'll tell you that much.
Right, but you're better at getting that person into their dream home,
Yeah.
right? Or selling that property at max price and trying to do the comparables and the research than you are at, making sure that all the dates match up on a document when that can be automated now, right? How are you guys finding things? Like, what are your clients saying? So I know what our clients are saying from the rates. Now turn it around. What are your clients saying that bought last year or bought the year before and like, oh my God, the value of my house has dropped. Like, are you getting those distress calls?
No, but I mean, if you're not selling, if they have no intention of selling, they're really not thinking about it too much, really. And we like to remind them as well when things are hot. Listen, are you selling? But don't worry about it. You're not moving. If you're not moving to Costa Rica, then don't worry about it, whether it's up or down, right? But when people ask us, should I sell?
Right.
We always go back and say, do you want your kids to be in that school district?
Right.
Yes. Okay, then it's time to sell.
Okay.
So the buying and selling in the same market is still very relevant. It really doesn't, in our opinion, doesn't matter. The delta in any market is, relatively the same.
Right.
I mean,
as long as you're doing it in the same market, it doesn't really. What we're seeing more of though is what we've had a couple times happening is sellers are so unsure about, especially right now because it's kind of getting towards Christmas, finding the house they need.
Right.
So we've sold properties.
Yeah, and you
We can't sell. We can't, guys. We have to back out, or in the period, the conditional period, we don't want to sell until we find something now because we're so unsure about what we're going to find.
this is a period.
So
sorry.
So it's uncertainty around the whole thing, everything really, that just makes it more difficult and harder to navigate.
And see, that's the tricky part because we're getting a lot of people who have bought that can't sell.
Well, that's
stuck.
a worse scenario because then you're in trouble, right?
I can't bridge. I can't do anything, right?
Prices drop, and now they don't get what they want.
It's bad.
So we're in a way we're regrouping as well because the activity is down. We're not we're not kidding ourselves with that. So we're regrouping because at the end of the tunnel is going to be we're going to be ready.
Yeah.
But one thing we've noticed, I think you're going to see a lot less realtors out there. I think,
as is usual when things shift. Yeah.
Right. So this is our time to actually shine, and we actually show some value, or people recognize our value in these kind of times.
Mm-hmm.
And because when things are going up, you can mask a lot of mistakes.
Right.
When things are coming down, I mean, we've had a few turbulent cases where people don't want to close, for instance.
Right.
We especially in our business, like we're pretty conscientious in how we conduct our business, but now more than ever, dot your I's, cross your T's.
Absolutely.
So
they will find any way to.
Actually, this was we were always careful, but now we're like, hey, we better make sure that we keep being careful because we're seeing some different.
You're seeing some interesting scenarios that are coming up, right? Some interesting scenarios, and you've got people who get emotional, right? So there is a lot of emotion sometimes with these, and I've got a client who's got a sale, but she purchased. Sale didn't happen. Now we've got to refinance a parent's house. That value is not coming in. The purchase value is not coming in. It's short. This one's not selling. 3 price reductions. And it's a perfect storm of circumstance. She did nothing wrong.
Yeah, just bad timing.
Bad time on 1, 2, 3 possible transactions. And the longer it goes, she's trying to shore up. And there's constant extensions, and every extension costs money. And you're thinking, oh my God, poor thing. Like, how do you help? And you're almost afraid to do the appraisals because you're like, do I even want to see what that's going to come in at, right? And that's the sad part in all this. And customers arguing with all the appraisals, that can't be the value of my house.
Right.
But let's look at the comparables. It actually kind of sort of might be, right?
Yeah.
It's a tough conversation, right?
It's very tough.
This is another, maybe we should have an episode of, another episode of experiences. Even just saying lately.
Yeah.
I think we can have a 2-hour episode just on, what's...
The things that have just gone
just
sideways just
in the last
because of the
year.
market turning, right?
Yeah.
It's scary a little bit, right? So being careful and prudent and just kind of taking that extra little bit of time to make sure that, clients are aware of what they're signing. Clients are aware of what the situation is. Clients are aware of conditions, right? Because one of my agents had the same thing. Guy bought, wanted to go 5-10% down, didn't sell. She put on there, the email clearly said, conditional on the sale of your property.
Perfect.
He didn't read it. Didn't read it and turns around and says, but you made me go firm. And she's like, no, but I told you, here's the email. And, price drop. And at some point, that one was high ratio. You can't sell under a certain price because then you're underwater. So it's tough. You see some of these stories and it makes you nauseous what's happening to people out there. So it's a little bit scary. On the flip side, though, I'm glad that your guys are having problems buying as opposed to selling. So
because we're really again, like I've told most of my clients we have both in the last 6-7 months, like we cannot buy before you sell.
Yeah.
Especially unless you're in a really, really strong position, you don't care to lose a couple $100,000.
Yeah.
But
or you've got money to back up the purchase where you don't need the sale money, right?
Or you can rent it out or
it's always the same question all this. Should I sell or buy first? And the answer is always whichever is harder to do.
Right.
So obviously in this case it's selling.
Yeah.
We do have an example of the buying as a problem, but of our buyer. They couldn't find anything. They were worried about selling before buying.
Yeah.
But really, in today's market, is worrying about selling first.
Absolutely.
Right?
Yeah.
So,
absolutely. Especially if you need that money for your purchase.
Yeah.
If you don't need it, that's fine.
Yeah.
Go and buy, knock yourself out, right? But if you need that sale to go through, which 9 out of 10
people
do.
Yeah.
Then let's do the hardest thing
let's
first.
just get rid of that. Yeah, but what if I don't find anything? Go rent, go do an Airbnb, go to a hotel for whatever amount of time frame it is. Sit on your money.
Really?
Yeah, you've got your money.
Yeah, exactly.
Yeah, but then you get into the families that don't want to miss. They want to move the kids into a rental first, short period of time. So it's just tough to make a decision. It's tough.
Yeah.
That's part of the transaction problem. Not problem, but that's one of the reasons people are just
they're just waiting. That's why you're seeing less sales volume.
But in a normal market, that would have been the case anyways. Forget the chaos where it was seller's market and all I needed to do was say, hey, I might list my house and it was gone. Right? Once upon a time ago in a real market.
It was a balanced market.
You had to market the property. You had to maybe go back and forth.
Yeah, you had to reduce
It wasn't
price.
taking 2 minutes to sell a house. It was taking maybe a couple of weeks or a couple of months.
Or
Closing dates were once upon a time ago 90 days, 120 days. Now we were closing things in weeks. And you're like, what is going on out there?
Yeah.
Right?
Yeah.
So in a balanced market, you still, what comes first, the chicken or the egg?
Right.
Right?
Thanks again.
My pleasure. I love helping you guys out and coming out to sit and chill with you guys. Thanks for having me.
Where can
they find us?
Yeah,
you can find us at sherwoodmortgagegroup.com. And we're on Instagram, we're on Facebook, and they can find me at athenac@sherwoodmortgagegroup.com. Send me an email.
Perfect.
And,
or ask us and we can.
Or ask us, DM us on social
Yeah.
media or emails. We'll be happy
Like,
to provide that information.
subscribe, and follow.
Is that what it is?
I think so. I don't know.
Beauty.
For YouTube, at least.
Okay. Perfect.
Okay. Thanks.
Awesome.
Thanks.
Thank you.